Welcome back to Modern Finance, your one-stop destination for all the latest updates and analysis on the world of cryptocurrencies. In today's episode, we'll be looking at SPX, DXY, BTC, ETH, BNB, XRP, ADA, MATIC, DOGE, and SOL. So stay tuned. Let's get started. Bitcoin and the United States equities markets are trying to start the week on a positive note, but some analysts are skeptical about the short-term prospects of the markets. According to Bloomberg Intelligence senior macro strategist Mike McGlone, Bitcoin will face significant resistance at $25,000, like I mentioned yesterday. McGlone believes that it may be a while before buy and hold types gain the upper hand. It also looks like Bitcoin whales, unique entities owning 1,000 Bitcoin or more, are also not convinced of the recovery in the crypto markets. According to Glassnode, Bitcoin whale numbers have fallen to 1,663, which is well below the peak of 2,161 hit in February 2021. It is difficult to catch the bottom in any market, hence, traders should try to build a portfolio when they believe that the downtrend has ended and a basing pattern has begun. Instead of buying the entire quantity at one go, they could gradually build a portfolio and aim to finish the purchases before the assets pick up momentum and shoot higher, which is basically DCA. Could the strength in the equities markets pull Bitcoin and altcoins higher? Let's study the charts and find out. SPX. The S&P 500 index SPX plunged below the 20-day exponential moving average, which is at 4,046 on February 17, which intensified selling and pulled the price to the uptrend line. Although the bears pulled the price below the uptrend line on February 24th, the lower levels attracted buying as seen from the long tail on the day's candlestick. That helped the index close near the uptrend line. The bulls may face an uphill task as the bears are likely to sell on any relief rallies near the 20-day EMA, as seen from the long wick on the February 27th candlestick. If the price turns down from the 20-day EMA, it will suggest that the sentiment is negative and the traders are selling on minor rallies. A close below the uptrend line may open the doors for a possible drop to 3,764. If bulls want to salvage the situation, they will have to push the price back above the 20-day EMA. If they do that, it will indicate that the break below the uptrend line may have been a bear trap. The index could then attempt to rally to the overhead resistance of 4,200. Now, let's have a look at DXY, the US dollar index. The bulls successfully defended the retest of the breakout level from the wedge pattern on February 20, which started a strong relief rally. The index has reached the 38.2% Fibonacci retracement level of 105.52. This level may see an attempt by the bears to stall the recovery. If sellers want to maintain their hold, they will have to sink the price below the moving averages. On the other hand, if bulls want to strengthen their position, they will have to push the price above 105.52. If they manage to do that, the index could extend its recovery to the 50% retracement level of 106.98, and then to the 61.8% retracement level of 108.43. Now let's talk about Bitcoin. Bitcoin rebounded off the $22,800 support on February 25th and rose above the 20-day EMA, which is at $23,417 on February 26th. This suggests that lower levels are attracting buyers. However, the bears may not give up easily. They will try to pull the price back below the 20-day EMA and challenge the 50-day simple moving average, which is at $22,433. If this level gives way, the BTC USDT pair may plummet to the next major support at $21,480. Alternatively, If the price once again bounces off $22,800, it will signal that buyers are fiercely defending this level. That may indicate a range-bound action between $22,800 and $25,250 for a few days. Now let's move to Ether. Ether rebounded off the 50-day SMA, which is sitting at $1,587 on February 25th, indicating that the bulls are fiercely defending this level. The 20-day EMA, which is at $1,626, has flattened out and the RSI is just above the midpoint, indicating a balance between supply and demand. This balance will tilt in favor of the bulls if they thrust and close the price above $1,680. The ETH USDT pair will then attempt to rise above the $1,800 resistance and start its journey toward the psychological level of $2,000. Alternatively, if the price once again turns down from the overhead price, it will indicate that the bears are not willing to give up. That might increase the possibility of a break below the 50-day SMA. The pair could then drop to $1,460 and later to $1,352. Now let's talk about BNB. BNB broke and closed below the 50-day SMA, which is at $307 on February 24th, but the bulls purchased the dip and pushed the price to the 20-day EMA, which is at $309 on February 26th. This level is attracting selling by the bears. If the price turns down and breaks below the $295, it will indicate that sellers have flipped the 20-day EMA into resistance. The BNB USDT pair could then tumble toward the critical support at $280. This is an important level to watch out because a bounce off may point to a range formation between $280 and $318 for some time. The next trending move in the short term could begin if buyers drive the price above $318 or bears sink the price below $280. Let's move now to XRP. XRP's price has been swinging inside a large range between $0.30 and $0.43 for the past several weeks. The price broke below the 50-day SMA, which is at $0.39 on February 23rd. And has been gradually falling toward the solid support at $0.36. The 20-day EMA, which is at $0.38, has started to turn down and the RSI is in negative territory, indicating that bears have a slight edge in the near term. If the price breaks below $0.36, the XRP USDT pair may slide to the support line of the descending channel. This negative view could invalidate in the near term if the price turns up and rises above the channel. The pair could then attempt to rally to the overhead resistance at $0.42, where the bears are expected to mount a strong defense. Let's move to Cardano. Cardano bounced off $0.35 on February 25th, but the recovery is facing selling at the 50-day SMA, which is at $0.37. This indicates that the bears are trying to flip the level into resistance. The moving averages are on the verge of a bearish crossover, with the 20-day EMA at $0.38 dropping below the 50-day SMA. Such a move will suggest that the bears have the edge in the near term, and a break and close below the strong support zone between $0.34 and $0.32 could start a decline to the $0.26. If bulls want to prevent this downtrend, they will have to propel the price back above the 20-day EMA. The ADA/USDT pair may then climb to the $0.42 to $0.44 resistance zone. Now let's move to MATIC. Polygon plunged below the 20-day EMA, which is at $1.30 on February 24th, and the bear successfully held its retest on February 26th. This indicates that the 20-day EMA is acting as the new roof. The bears will next attempt to sink the price below the 50-day SMA, which is at $1.16. If they succeed in this endeavor, the selling could intensify and the MATIC USDT pair may tumble to the next strong support at $1.05. If buyers want to regain the upper hand, they will have to thrust the price above the 20-day EMA. That will indicate selling buying on dips. The pair may first climb to $1.42 and thereafter rally to the $1.50 to $1.57 resistance zone. Now let's talk about Dogecoin. Dogecoin bounced off the strong support near $0.08 on February 25th, but the recovery is facing selling pressure from the bears on February 27th. The moving averages have completed a bearish crossover. The RSI is in the negative territory, indicating that bears have the upper hand, and a break and a close below the $0.08 support will complete a head and shoulders pattern in the near term. The Doge/USDT pair could then plummet to $0.07, so pay attention to that formation. Contrary to this assumption, if the price turns up from the current level price of $0.08, it will indicate that lower levels are being seen as a buying opportunity. The relief rally may face selling near the downtrend line, but if bulls overcome this barrier, the pair could attempt a rally to the $0.10 level. And lastly, let's talk about Solana. Solana is witnessing a tough battle between the bulls and the bears near the 50-day SMA, which is at $22.75. This indicates that the bulls are attempting to protect the level while the bears are trying to break it and come out on top. If the price slips down below $21.41, the Sol USDT pair could drop to the important support at $19.68. This is an important level for the bulls to defend because a close below it may increase the selling pressure and sink the pair to $15. So pay attention to this. On the other hand, if the price turns up and rises above the 20-day EMA, which is at $23.23, the bulls will push the pair to the resistance line. The bears are likely to defend this level with all their might, but if buyers overcome this obstacle, an up move to the $39 level is possible. Well, that's all for today. Thank you for watching and see you in the next one.